Hello and a very good morning to all the participants of the webinar. Welcome to this presentation by the Common
Good
Fund.
morning, sir. Good
Welcome to
morning,
the
sir.
presentation by the Common Fund for Commodities.
Good morning.
Afternoon from Bangladesh.
My name is Andrei Kuleshov. I'm Chief of Strategy of the Common Fund for Commodities, and here with me is my colleague, Mr. Chris Rallis, who is Investment Manager. And together we will take the next hour to guide you through the application process for the Common Fund. First, a few technical notes. I'm sure that the platform is already sufficiently familiar to everyone, but just a quick reminder that if the broadcast for any reason is interrupted, just reconnect with the same credentials. You can ask questions in the chat box. My colleagues are monitoring the chat box, and we will try to answer as many questions as possible during our conversation without disrupting the presentation itself. When you are not speaking, please mute the sound to keep the virtual meeting room sufficiently quiet so everybody can hear what has been said. Any questions that you may have, please use the raise hand function in the Zoom platform so we can see you, and we will try to give some space for answering the questions in the process of the webinar. Now, in today's presentation, we will cover four main topics, and that is what is the CFC, what it is that we're doing, what is our focus on commodities, and the details of the open call for proposals and the main elements of the application form that needs to be completed. There is always a question regarding whether my project of this and that type is suitable for consideration by the Common Fund. And we will probably be coming back to this. We will not be able to answer those questions right now on the spot because we do need to see the complete application form filled out to understand what the project is about, to be able to say if it's suitable or not suitable for CFC financing. I count on the understanding in this regard. So quickly about the Common Fund for Commodities. This is not widely known, but this is an international organization founded by the United Nations with the headquarters in Amsterdam in the Netherlands only. We do not have any field offices. It is a small office in Amsterdam from which we are trying to reach out to all our partners. The CFC was established in 1989, again in the UN Conference on Trade and Development, and we currently have 101 member countries. It is a membership-based organization, so for a country to be able to submit project, or rather for a country must be a member of the CFC for the businesses in the country to be able to submit proposals to the CFC. Also, the CFC has a number of partner institutions as members, and that's the European Union, African Union, COMESA, Southern African Development Community, Economic Community, West African States, West African Economic and Monetary Union, Caribbean Economic Community, East African Community, and the Andean Community. These are all regional organizations of international economic cooperation, so they participate in the deliberations and in the work of the Common Fund for Commodities. Now, over the years, the CFC has financed quite a number, over 500 value chain projects with the financing of in excess of 800 million. Since 2014, that's just over 10 years, the CFC is acting as impact investment organization. And over this time, we invested 52 million in over 50 projects. Currently, we have 38 million outstanding and committed. And over the years, we had activities in 99 countries. So we do have a lot of experience, and we do have the capacity to provide financing where it can make a difference. Now I'm going to say a few words about our understanding of the development function of commodities. So, in the center, commodity dependence is the root of poverty problems for over 2 billion people worldwide. I have to say it's a very rough estimate, and today the number is probably going to be even greater. The CFC is addressing the commodity dependence by impact investment in commodity sector innovation. And we seek to use our investments to transform commodity value chains towards greater equity and greater sustainability. The slogan is making commodities work for everyone. That means that our typical projects aims to make sure that all the people involved in a commodity value chain can get a fair compensation for the contribution they make to the global economy by producing and trading and processing commodities. So the vision of the CFC is that commodity sector can play a significant role in global development, in poverty alleviation, and sustainable growth. And the vision, the mission of the CFC is to contribute to this cause by strengthening income generating capacity of the commodity sector, particularly at the grassroots, particularly in the countries that depend on commodities, particularly for the people and communities who depend mostly on commodities for their income and prosperity. Now, the next diagram shows this what a typical eligible CFC project is expected to look like. In the center, at the heart of the project, there is certain type of small and medium enterprise. It could be a cooperative, it could be a private business, it could be even an individual entrepreneur, or it can be some kind of partnership that operates in the commodity sector. This small and medium enterprise sources obtains commodities from the smallholder farmers at the grassroots, from the people whose life depends on commodities, and from the people whose income from commodities is clearly insufficient or is clearly inferior compared to the value that they create for the commodity sector. Those small and medium enterprises can organize logistics, can provide inputs, can provide processing, storage, innovation, quality improvement, certification, as well as packaging, marketing, distribution, sales, anything what is needed to bring the commodities produced by the poor and the underprivileged people, to bring it to the high value markets, whether global or local or international or regional, where additional value can be generated and transferred to the primary producers. So the key message here is that in our typical projects, the value for the target beneficiaries is not created so much by the money provided by the CFC, but it is created by channeling the money from the markets, the value from the markets, to the primary producers of commodities. In this sense, we understand the CFC contribution as a catalytic function to make sure that commodity value chain contributes to everyone. And the CFC contribution to this process, as you can see on the picture, it's trade finance, it's capital expenditure, loans for any kind of improvements in the value chains. It can be working capital, the fuel that makes the small and medium enterprises function, and it could be quasi-equity, more or less any kind of innovative instruments, including development impact bonds that the CFC can analyze, and if it's appropriate, then the CFC can finance those as well. So I would emphasize that this is the more or less key diagram that brings the whole understanding of the open call for proposals together. So the key question whether the project qualifies or not is how do we understand it in the context of this diagram? How does the proposal connects the producers of commodities to higher value markets, and what are the improvements that the project will do to make this possible? So we source those proposals from the open call. That, as the name suggests, it's open to everyone. So literally any organization can apply. The only expectation is that the organization has a legal personality to be able to conclude a contract with the CFC. Application process, we'll talk more about it. And then the features of the projects that you might think about in the open call. It's agricultural commodity sector. It's not necessarily exclusive, but it is our experience now is that most project proposals come from the agricultural commodity sector. Anybody who is active in the commodity sector is invited to apply if the operational model helps to achieve greater, more equitable value distribution in the commodity value chain. We strongly encourage innovation in commodity value chains, and there is a few elements listed on the screen, and there can be more. The development thinking keeps developing. So for now, the buzzwords are agroforestry, climate smart agriculture, renewable energy, prevention of deforestation, addressing the EU deforestation regulation, digitalization, financial instruments, and more. So please do not hesitate to come to us with anything that you believe is innovative. Also, as the name suggests, the CFC, being an impact investor, looks at its financial operations as financially viable. We do need to see the financial viability in the application form. So we do require financial projections that would demonstrate how the particular project will reach financial sustainability by the time the CFC leaves the project, exits from the project. Also, we'll look at social and environmental sustainability. We will say a few more words about it. Being an impact investor, this is essential that we understand all dimensions of the impacts that we create through our projects. Now, when you have submitted an application in the call for proposals, sometimes there are questions, I'm late with my application, can we extend the call for proposals? No worries in this regard. The call for proposals is basically open the whole time, but every 6 months there is a deadline in April and September, and then there is a 6-month process of processing the applications. And when one call completes, the next one follows. So whenever you are ready, you can submit to us your application, and it will go in the next cycle. It will be considered in the next cycle. Since we have 2 cycles per year, it basically means that you get 6-month lead time when you submit an application for us. So you will get a decision from us within 6 months from submitting the application. During the whole process, we are real people. We do read all the applications that are submitted to us. So we may come back to you if we do not understand something in your application form. And it is highly appreciated that we receive substantive responses. If basically we have something that is not clear in the application form and we do not get a reply, that means that we will not be able to do justice to the proposal, and we might not take it for subsequent consideration. The process involves internal screening by the CFC Secretariat. So every application that we get will be read by somebody, and we complete a one-page checklist confirming that the proposal meets the basic qualification criteria of the CFC. After that, the proposal will go to the CFC Consultative Committee if all the checks, if the screening checks are completed. The Consultative Committee of the CFC consists of 9 experts, 2 from Africa, 2 from Latin America, 2 from Asia, 1 from China, 1 from Russia, and 1 from the OECD countries, so representing the whole world, and representing all kinds of expertise in the commodity sector. So do expect that if your proposal is meeting the screening criteria, somebody will be evaluating it with real experience from the relevant commodity sector. One of our consultants from the Consultative Committee will make a thorough review of the proposal. The committee meets twice a year. That determines our cycle. They meet either virtually or in person in January and July, where they sit for a week to read, carefully discuss, and review all the qualifying projects and make a recommendation whether the CFC needs to get involved in the project or not. Typically, a recommendation by the Consultative Committee contains a number of let's say, terms and conditions that the proponents need to respond to. And if the responses received by the Secretariat meet the expectations of the Consultative Committee, then the proposal will be put forward to the Executive Board, and the Executive Board will decide on the CFC commitment to financing the proposal. The Executive Board will meet in April and will meet in September based on the recommendation of the Consultative Committee. To give you a complete diagram of how the process looks like, so we are currently here up to April 2026. We receive applications that will be considered in the 28th call for proposals. From April onwards, we will start screening the applications. In June, we will send the applications to the Consultative Committee. And in July, the Consultative Committee will meet and discuss the proposal. Then we will come back to successful applicants with the additional terms and conditions from the Consultative Committee and prepare our submission to the Executive Board. The Executive Board meets in October 2026, closes and decides on the conclusions of the 28th call for proposals. And then we are ready to process the next. We start processing the 29th call for proposals. That will follow in the next 6 months. And from more or less October 2026, we will start applications for the 30th call for proposals. So it looks a bit messy, but basically we have 2 cycles per year and they follow each other constantly, overlapping. So whenever you send an application, it will be considered in the relevant call for proposals. Now, with the conclusion of the Executive Board, life does not end, because then we need to conclude all the requirements imposed in the Executive Board decision and concludes the relevant legal documentation. Up to the decision of the Executive Board, all our consideration is based on the information contained in the application form plus any responses that we receive from the proponents. We will then proceed to due diligence checks after the decision of the Executive Board. We will first do desktop due diligence, come back with any questions, then somebody will come and visit the project site to do on-site due diligence and to verify everything that has been mentioned in the application form. Then we proceed to prepare the relevant legal documentation, propose certain terms and conditions. And in general, the Executive Board expects that proposals need to start 12 months, no later than 12 months after the board approval. If we have not been able, due to legal problems or due to some conditions not been met or any other reason, if the project has not been able to start within 2 years after executive board approval, then we may apply sunset clause where we withdraw the commitment of the CFC to finance the proposal. And now we are going to proceed to the application form, where I would like to hand over the microphone to my colleague, Chris. Chris, please go ahead.
Thank you, Andre. Thank you very much. Good morning or good evening to everyone. On behalf of the CFC Secretariat, I would like to thank you for your interest in the call for proposals. And what I will do for you today is that I will walk you through the CFC application form and also the Excel templates that you need to prepare and submit to be considered for CFC financing. Please note that both the application form and the Excel sheet are available in our website, so you could find it there. Now, I will also share with you some tips and information on how to compile the application and why not prepare an effective and successful funding proposal. So before we start, a few things that I need to mention to you. At any stage, the CFC will never ask you for any fee. We will not charge you for any fee in the application stage. We will contact any company, an applicant, if successful. If not, our capacity is currently a little constrained, so we might not be able to follow up. But still, please reach out to us if you have any questions. Finally, all the information that you share with us are bound by confidentiality, so we do not share your information with other organizations outside the CFC. And then we can move, I think, in the next slide, which is the actual application form. Now, before we begin with the application, one advice that I would like to give you is that less is more. So please, in general, to try to keep the application within the 20-page limit that we propose and try to be concise and clear. This makes both our lives easier. At the one hand, as Andre said earlier, we have to screen more than 200, sometimes 400 applications, so it's a little difficult for us to keep on track. But on the other side, we don't want to overwork you. What we need is information that are sufficient for us to understand your business case. Now, the first chapter of the application form, called organizational, this section 1.1, what we would like you to do is basically to write down the name of the organization, the legal type of the organization, who are the founders, and when and where was this organization incorporated. Just as simple as example would be, for example, CFC is an intergovernmental financial institution founded by the UN in 1989, and this is based in Amsterdam, the Netherlands. That's it, nothing more, nothing less. In section 1.2, market target markets, here what you have to do is basically write down the country or countries where you operate in, including your focus markets, the markets where you export your products or you offer your services. Now, why do we ask that? This is a very important section for us because this is how we check if your application is actually eligible for CFC financing. I saw quite a few questions on this already, so please remind it that we can only finance projects and entities that are either based in CFC member countries or operate in CFC member countries. Just a simple example, because I saw it quite often, can application concern more than one country? Yes, they can. Also, for example, if I'm based in a non-CFC member country, but my work is in a CFC country, can I apply? Of course you can. In this section, in the next section, 1.3, brief summary, what you What we ask you to do here is to provide a short summary of your financing objective. This means that we want to know what do you want to achieve with CFC financing. So try to give us a concise but yet descriptive overview, and maybe use a few bullet points of the most important aspects of your application and what you would like to achieve with CFC financing. In this case, a nice tool that you can use. AI tools are always welcome to create bullet points in this regard. So let's go to the next slide, please. And the next chapter of the application concerns the reason we are here, the type of financial instruments that you can request from the CFC. Before we go in depth to each and every financing tool that the CFC can offer to you, let me first to introduce you to a couple of principles that we have here in the CFC. The first principle, the CFC financing cannot exceed 50%. What that means? This means that CFC financing should at least be matched by other sources of funding. This could be other loans that you already have in your balance sheet or you are planning to secure in the future. It could be the equity that you have invested in your company. It could be also the retained earnings from the future. Also, it could be a grant that you have in your visible in your balance sheet. Now, to avoid confusion over this principle, let me give you a few examples. Let's say you are a company that has some loan facilities in your country, but now you need extra working capital for your export activities. Are you eligible for CFC financing? Of course you are. Why? Because your local financing lines matches the lines of CFC. Also, let's say uh, you don't have any loan financing yet, but yet you have invested in your company in the form of equity. Are you eligible for CFC financing? Can we mute people? Yeah, thank you so much. Um, and you have already invested in equity in your company. Are you eligible for CFC financing? Of course you are, because your equity investment matches CFC financing. Now, in general, I invite you here to consider it as a thought experiment and see if you can actually identify your matching funds. But in overall, it does not mean that these should stop you from applying for CFC financing. From our experience, there is always matching funds that we can identify in your business case. If you have further questions on that, please reach out to us with a question on that, and we will try to reply as soon as possible. Now, the second rule, which is connected with the first principle, is that if you are saying that you have matching funds, those funds should be visible from your financial statements. What that means is, for example, if you are telling us that you have loans from local or international financial institution, we should be able to see those in your balance sheet. Also, if you, for example, are planning to use as matching funds earnings, we should be able to see that in your projections. Now, the third principle that we have in the CFC, and that's the first thing that actually is super interesting for you, is the tenure of CFC financing. Now, in principle, the CFC enters only long-term partnership agreements with its applicants. That means that in the end of the day, we will be signing with you a framework agreement for 3 or even 5 years. This, and please note that, concerns also our short-term financing tools, for example, trade finance or working capital facilities, which typically are 12 to 18 months, but they are annually renewable for up to 5 years. Now, the final thing, and also probably a question that I saw in the chat, what is the CFC charging in terms of interest rate? So, in the CFC, we have a very transparent way of calculating our interest rates. What we do is we take into consideration the country credit risk plus a company-specific risk minus an impact premium. Now, this might appear complex, but in reality, it's quite simple, and it is translated as we are always cheaper from the local financial institution, and we tend to be on the cheaper side among other development finance institutions. Now, let's move to the actual facilities and see what the CFC can offer you. The first facility that we have is trade finance. Now, this kind of facility should be very familiar, particularly to cocoa, coffee, soy, and other exporters working in the most developed value chains, let's say. So, what is trade finance? Trade finance is short term financing facilities for the execution of specific purchase orders. This could range from disbursement against documents, but it could be also the case that the CFC disperses funds already at the time when the company sources the raw materials from the farmers. What is important here to remember is that since trade finance is always linked to the execution of specific purchase orders, we would like to know more about your clients. If you see on the right side, there is a little box where you can indicate your client. Now, probably you will ask me, Chris, at the moment that we're submitting the application, we don't have this information, or the activities that we are requesting financing for are planned for a year ahead. Yeah, this is fair. What you can do there is actually provide us with an indicative list of clients. So we work with 1, 2, 3, 4 clients in those countries. That is sufficient at this stage. Why this is important? Because as we said, trade finance are always based on POs, and they are also based on tripartite repayment instruction between the CFC, your buyer, and of course you. Now, what is the big advantage of trade finance? Is that in normal cases, we do not ask any further collateral apart from this tripartite repayment instruction. The amounts that we offer for trade finance goes up to 2 million. And I will first make a huge disclaimer here, which concerns both our trade finance facilities, our working capital facilities, and also our term loan facilities. The amounts that we can offer from our core CFC portfolio goes up to 2 million. Nevertheless, for companies that are requesting larger amounts, this is possible. With our new ACT fund, for which several of you already asked about, we can accommodate amounts higher than 2 million. If you have any questions concerning that, please reach out directly to the email open call, and we will let you know if you are eligible for something like that. You can always do the application, of course, and we will take it into consideration. Now, our next type of financing, working capital, yeah, those are more flexible, untied, short-term financing solutions that we provide here in the CFC. Now, in this case, as you probably understand, the CFC exercises less control over the cash flow of the company. So, what we would require in this case would be a stronger security or a collateral. This could be a pledge on inventory, it could be a pledge on other fixed asset. We could work on a basis of a collateral management facility. It could be also a third-party guarantee from, let's say, a local or an international bank, or even a government guarantee. Now, the rule of thumb here is that the longer the cash cycle of the company, the more securities we would probably looking at. As we said, the tenure for working capital facilities, it's between 12 to 18 months, annual renewable for up to 5 years, and concerning the amounts, same as in trade finance. Term loans. Term loans are the classic CFC product concerning mainly capex loans. This is loans for the construction of factories, the purchase of machinery or vehicles or other relevant activities. Now, in this case, what we usually offer is a tenure of up to 7 years with a 2-year grace period. Now, I saw a few questions from applicants concerning financial institutions. Yes, if you are a financial institution, of course you are eligible for CFC financing, and my suggestion would be that you actually use the term loan box to indicate your interest on CFC financing. Now, going to our next one, equity investments. Equity investments are actually part of the CFC mandate. Full disclosure here, at the moment, we don't have the capacity to do equity investments directly to companies. What we do instead is actually invest in other impact investment funds, which usually have a higher impact profile, but also a higher risk profile than the CFC. So if you are an impact investor or a fund requiring financing, please feel free to apply. The next one is our development impact bonds. Now, this is one of the most recent innovations here in the CFC and one of the first facilities of this type in the world. So what is the development impact bond? Is basically outcomes-based financing. And when we talk about outcomes, we mean real, tangible impact on the ground. Now, we have designed this instrument particularly to unlock financing for non-governmental organizations, government agencies, consortiums. It could be development consultancies, but it could also be companies. So if you have an interesting case here, please feel free to reach out to us. In our website, there is plenty of material concerning the development impact bond. You can take a look there, and if you have any questions, you can further ask us on that. Our final type of facility, and we go to the next slide, is our fast track loan. So fast track loans were facilities that were designed during the COVID period when many companies required emergency liquidity to survive. So we have kept those facilities open, and we have actually extended it very recently. So the amounts can go up to 500,000. Now, traditionally, this is one of the most competitive product lines of the CFC because it serves small ticket sizes. So we reserve those financing instruments for highly innovative with high impact potential and additionality for the CFC cases. One important note here, you could use this instrument for a loan application like trade finance or working capital or term loan for up to 500,000. So if you are a company interested for a small amount, up to 500,000, you could use this facility for your application. We do have a revenue cutoff that's up to 3 million revenues per year for a company. What is very beneficial using the fast track instrument is actually timing. So it actually takes a shorter period for us to approve relative to the other facilities. And now we can move to the next slide, please. It should be management and operations. And starting with section 3.1, management and ownership, what we want you here to do is basically provide us with the names of the people managing your company or organization, who are the key people running the company, and what is their specific role or job title. Also, does your company or organization have a board of directors? Are there any other committees available in your corporate structure? For example, a nomination committee or a nomination committee. Now, all this information are super relevant. You could indeed provide this information by text, but I find that the easiest way to do so is by using a simple graph, a nice org chart showing your board of directors, maybe the names of the people, and also their job title. Now, in addition to this information, what we would like you to do is also provide us with information about who are the shareholders of the company, if they are, and how is the ownership of the company divided between shareholders. Particularly, please pay attention. Is your company a holding company that owns other companies, or is your company owned by other companies, or is it part of a larger, let's say, business group? Again, you can provide this information by text or by simply providing us with an org chart or a table that describes the shareholder ownership structure. In section 3.2, current business model, and here it becomes more interesting for us, what we need is a high level description of what the company does. Now, here, please assume that we know nothing about you and nothing about the value chain or the sector that you operate in. In principle, you are the expert in your commodity, in your value chain, in your line of work. So please start from the basic. Information that you can include here is, for example, the type of products that you're producing or the services that you offer, the type of raw materials that you are sourcing from farmers and how, and what kind of processing activities are you undertaking and how many employees, for example, you have. You can explain also who are your end clients of your services and products, and also in which countries do you export those products or offer your services. Now, the key here, and easier for you, is actually to include numbers. For example, processing volumes per year or simple number of employees, permanent or temporary employees. You could also include sourcing volumes per year and other relevant information. And we go now to the next slide, please, which is market opportunity. Now, in general, what we ask in this chapter of the application is basically how does your market and the environment where your company operating in looks like, and how your company fits into that market. So starting with section 4.1, what we ask you here to do is to explain us the basic characteristics of the market that you operate in, both at a local level but also at an international level if that is relevant to you. Now, think about information, for example, such as, is it a very competitive market that I'm working in? Are there many companies doing the same thing as my company? Or are you the only one offering the specific product or service at your country or internationally? Other things that you can include here could be, for example, what is the price competition looks in this market? Is it a spot market, or is it a market where mainly fixed prices are used in the sector? Are you using long-term purchase agreements with your buyers or not? Other things that you can explain here in more details are actually the products that you're offering and how these differentiate you from your competitors. And you could also include the names of your competitors if you are aware of them, and also information about your market share if you have that available. Usually, in most of the countries, the relevant Ministry of Agriculture or commodity bodies in the country do have this kind of information. So I would refer you to their websites. You could take a look in Google and find some relevant information. Now, in section 4.2, key strengths of your business model is where you have the opportunity to showcase your company. So try to make a list of the positive, the good points of your application, and feel free to think creatively. For example, do you have a niche product or a very high quality product that differentiates you from other competitors? Or do you have only one product or many products? Do you have a unique selling proposition relative to your competitors? Think also information like is there a government policy concerning your product or service that is very beneficial for your business activity? For example, a government subsidy, or maybe international free trade agreement that allows you to export in specific countries. Also, if you are certified, for example, organic certified, fair trade certified, Rainforest Alliance, BRC, ISO, or any other type of certification, please include this information here. It's super relevant. Finally, and very important, do not forget about describing a little your sourcing strategy. How do you source your raw materials? What we need here to know specifically is, do you work directly with smallholder farmers or do you use aggregators? And if you work with farmers, what is the basics of your relationship with them? Are you having long-term relationships with them and contracts, or you work on a spot market basis? Also, very important, here is where we find the social impact that the CFC is looking. So basically impact to smallholder farmers. So try to be clear here and put as much information as possible. The last section of this chapter, 4.3, obstacles. Every company has some obstacles. Please here write them down so that we can understand the potential constraints that you might have and also adapt to your needs. Reminder, all our facilities are tailor made to the needs of our investees. So think, for example, internal shortcomings. For example, we don't have enough employees or qualified employees for the specific service that we want to offer or activity. Maybe, for example, it's very difficult to find in my country qualified employees. Other things that you might consider is the machinery that I need easily accessible to my country? Also, you could consider sourcing risks or transport risks. Are there enough containers available in my country for my export activities? Or is freight accessibility easy in my country? So let's move in the next chapter, chapter 5. And this is basically a reflection of the previous chapter. And what you need here to think is how will the company look after CFC financing. So starting from 5.1, what we want to know is, are there any changes in your business after receiving CFC financing? Will you be changing business strategy? Or are you going to be introducing new products or services or new innovative products? And also in section 5.2, are you going to increase the number of your clients, or are you going to just increase the volumes that you offer to those clients? In section 5.3, it's where you describe the impact of CFC financing in your supply line. So are you going to onboard more smallholder farmers in your sourcing network, or are you going to increase the volumes that you are sourcing from existing smallholder farmers that you have in your network? In section 5.4, here, what we want is the impact on your processing capacity. Is CFC financing going to enable you to have better or higher quality products? Or are you going to increase the processing volumes that you can produce per year? Those are all relevant information. And finally, chapter 5.5, innovation. Now, different people mean different things with the word innovation. In CFC, we do have a very holistic attitude towards innovation. So it could be of course, a technology that you're introducing either internationally or just in your country, but it could be also just a new business model that you are testing in your country or your region. In addition, we have a particular interest in innovative projects such as agroforestry, smart agriculture, food security focused projects, geomapping, carbon credit. I mean, the list is here is almost endless. So try to be creative in identifying your innovation aspect in your proposal. And I think now I should leave the rest to Andre.
Yes, thank you, Chris. So next section concerns development impact of the project. And as the name of the CFC suggests, this is an impact investment fund. So the application form needs to explain what the difference in terms of sustainable development would the proposal make based on the operational model that is described earlier. So please summarize how the CFC financing will be used to deliver impacts, what difference it is going to make. To be able to coordinate our contribution with the rest of the UN system and with other international organizations, we do need to see the impact in the context of sustainable development goals. So by all means, please indicate how you relate impact from section 6.1 to specific sustainable development goals agreed by the United Nations. Also, we will ask for some background, and that's the profile of the beneficiary. Nothing particularly fancy, but please use the best data available to describe the people who will benefit the most from the proposal. And finally, do consider social and environmental risks created by the operation that is being proposed. And if there is any negative impact possible, please indicate the mitigation measures. We are required to review all the risks carefully and to make a note of the mitigation steps that the project will be expected to take to address the adverse impacts on the environment and the social conditions. To be specific, we do require you to propose impact indicators. There is a fairly complicated system developed by the Global Impact Investment Network, where you can find the relevant and specific impact indicators that will reflect your project proposal. The application form contains some suggestions of the impact indicators that you may want to include. Please review it carefully. If you have questions, please do not hesitate to contact us on the open call email address. It's a real email address. Somebody will read it and will try to address the questions. And I believe I do not need to take much more time on the impact indicators. I would rather pass the floor back to Chris regarding the financial performance indicators while we still have time. Thank you.
Thank you so much, Andre. So again, just a reminder, what you need to submit is the application form, the Word application form found in our website, but also the Excel sheet that Andre mentioned earlier. This contains your financial information, a P&L, your balance sheet, and also the impact indicators. Now, going back to the application form in section 7, what you have to do basically is the story behind the numbers. So we do have, if you submit them, your financials, and we do have the Excel sheet containing your financials. We don't need just the numbers. Here we need a concise story behind the numbers. So if you achieved, I don't know, a 10% growth every year of revenue, How did you do that? Did you increase your exported volumes? Was that driven by price increases? So, and also the same for the projections. How do you expect to achieve your projected sales growth? Are you expected a higher demand for your products? Are you introducing new products? Or you believe, for example, that your products are going to be more expensive in the future? And if we go to the next slide, please. No, let's stay to the same slide actually. 7.3 section. I think we covered 7.1 and 7.2. And the 7.3 is actually really important. What it is here, sourcing of funding and additionality for CFC. What we ask here is a very simple table that includes the name of banks, investors, or grantors that have provided you with loans, grants, or any type of financing, including, in the case of loans, the amount, the maturity date of each loan, the collateral you used, and also the interest rate you are charging. Now you will be asking, why are you asking this, Chris? Is it because you want to bargain with us the interest rate? No, it's not. What we want to see here is actually to identify the additionality for CFC financing. So the CFC should always basically cover a gap in the market. So we want to see where the gap is and also tailor our interest rates compared to the market. Okay, so try to be transparent here as much as you can. And the next section, 7.4. What we need here is a very simple list of the potential risks and also the mitigants that you define in your business plan. So, for example, you could consider, are there potential risks concerning the sourcing of my product? Are there any external factors influencing my business model? For example, are there any transport risks, freight availability as we discussed earlier, or, for example, a very common risk that we identify in agriculture is climate change. So, is your product affected by heavy rainfalls or droughts? Other things that you could consider, for example, is the currency risk. Are you selling your product in USD or hard currency, or you're using a local currency and that might have a risk in your business case? So going to the next slide, which should be actually the Excel sheet. You can see here the profit and loss statement. This should be clear to anyone that works in an SME. And in the next slide, you can also see a balance sheet. As you see, it's simple. Nothing very complex. If you don't have audited financials and you do have management accounts for the last year, you could use that also too. And let's go to the next slide, slide 8, supporting documents checklist. For me, this is the part of the application from which you should start and finish your application, because here are the required and also the recommended documents that we require. So from the required ones, the mandatory ones, let's say, audited financial statements for the last 3 years. As said earlier, if you have management accounts or from a public account, audited by a public account, that's also fine. Don't forget the Excel sheet, including your financial projections, including the P&L, the balance sheet, the cash flow statement, if available, and the impact indicators, plus your company registration documents and the legal ownership chart if you haven't included that in the relevant chapter we discussed earlier. Also, if you have any other type of documents like business plan, org chart, the CVs of your key staff, your articles of association, please feel free to attach it to your application. The more information are always relevant, and we can always take them into consideration. So next slide, which should be key details. Don't forget to put in the company details. Very important here, your address, website, most relevant. And finally, next slide is the affirmation. Don't forget to click on those boxes, mainly concerning that you're authorized to represent your organization or entity. And I think we covered everything. Yes, back to you, Andre.
Yes, Chris, thank you very much. We are now exactly at 11 Amsterdam time, and we try to answer a number of questions in the chat box. Now, okay, so the regular questions. We will share the presentation and recording with all the participants. We do not provide this webinar in French language. There is application form available in French, Spanish, Chinese that you can download from the CFC website. Operations of the project must be based in member country of the CFC. The list of member countries has been posted in the chat box multiple times. Please have a look. It's on the CFC website. A startup needs to have at least 3 years of financial history for us to be able to consider the application. We can look at all sorts of consortiums and any legal form of an enterprise. The only thing that we need to see is a viable operational model that can receive and repay CFC financing. Now, the term of financing is up to 5, in some cases 7 years, and the interest rate will be determined based on the central bank in the country where the project is operating, plus a certain addition for the specific risk of the project. So these questions came up multiple times, so I thought I will answer them by voice. A relevant question: after submission, how long does it take for you to find out about the results? We will only contact successful applicants, and if you submit by April, that will be decided by the executive board in September. If you submit by October, it will be decided by the executive board in April 2027, as was shown earlier on the slides. Again, we will share the full slide deck with everybody. So if you did not hear from the CFC within 6 months after the submission of your proposal, it is likely that your proposal has not been successful. You are welcome to amend the proposal and send it back to us. You can also submit multiple proposals to us. There is no restriction in this regard. Now, I understand that my colleagues and also the virtual conference room needs to be allocated for the next meeting that the CFC is having. So with our apologies that we will not be able to take questions. However, the contact details, please make a note: the CFC website and the CFC email address for the open call for proposals. As I mentioned, this is a real email address. There is multiple people who are receiving the emails on this address. We will respond to every question received on this open call email address. And somebody will try to respond the best we can. We do need to see the full details of the project to answer the basic question: is my proposal eligible? We cannot tell you in advance. We need to see a completed application form. So with that, Chris, anything else that we need to cover?
No, I think we covered everything, and I can see that we covered all the questions in the chat, so we can close this meeting. And thank you very much for your attention. If you have any questions, feel free to reach out to us. We will try to answer as soon as possible.
Thank you very much, Chris, and thank you very much, everybody, for joining us in this webinar. It is short, but all the information is available, and please do not hesitate to contact us. Again, thank you for joining us. this webinar is closed now.